Tiffany, I wonder from an investing perspective if that interest rate story, at least moving to the downside now, is enough for you to feel comfortable investing in the market right now. And are valuations at a fair level right now, or do they still need to pull back even more?
So, good morning, Don. It's good to see you. So first of all, I always feel comfortable investing in the market. I'm a long-term investor, and so if you at Pivotal, we invest for foundations and endowments, so we always have to be comfortable. And so I think that the bigger thing is, how do you navigate a market like this, right, with interest rates? And then, of course, we were talking about the jobs report that was released just last week. And I think that is, it really is challenging. Questions that are coming up, that have come up, of course, is this the bottom? Are we in recession? I believe the answer is no, just like your last guest. But how do you navigate that? And I think that, when we're thinking about valuations, I think we've got to think about two things. What are we interested in buying, right? What do you have conviction around? So when it comes to like your large stocks, like for us, staples like the Microsofts, Apples of the world, we're always going to own those at our firm. We have a long-term conviction around those, so it really just depends on whether we think we can get a better price. And we've been adding to those positions all year long. But in terms of portfolio positioning overall, we're doing a couple of different things, right? So we are still overweight equities, but we're selectively adding growth as well.
So if you're selectively adding growth, what types of growth are you looking for? Is it straight up in technology? Is it in those mega cap names that you talked about? Are you trying to find alpha, some outperformance in those growth names in other parts of the market, in the small and mid cap space? Where would you be looking right now, and what's on the shopping list?
So a few things. So first of all, in that discussion of, whether the Fed is going to have a soft landing or maybe just like more of a cushy landing, we don't really know, right? So I think to kind of play both sides, you really want to think about both cyclicals and defensives here kind of broadly. But in terms of selectively adding growth, we always like to invest along themes. And so we're looking at the fact that, in 2020, new business applications hit an all-time high. And then in 2021, we broke that record. And so we're seeing this shift in terms of people starting new businesses. The side hustle is real, and we're seeing companies like a Squarespace, like a HubSpot and Braze really kind of meet those customers, those who are starting new businesses where they are, and help them to engage with their customers and help them to really meet their customers where they are and be successful. So we're seeing that those companies are really doing well right now.
All right, so driving kind of like that consumer trade, trying to get people more involved in the purchase decision and everything else, and the companies kind of engage in that. That's okay, thematically, that's great. We also mentioned this idea of the hard landing, right? We've been trying to figure out whether the Federal Reserve can engineer a soft landing, that is to say a decent-sized slowdown in the economy without a full-blown recession. Do you believe that the most likely outcome, given what the Fed is doing right now and given where the economy is right now and given what we've just done politically in Washington with the Inflation Reduction Act, on balance, does that mean America is headed for a hard or a soft landing?
So my best guess is that we're somewhere in the middle, right? And I know it's probably not what you want to hear, but, at first, when you think about it, the Fed really does not have a great track record of soft landings. And so, they really have to kind of calibrate the tightening just enough to bring down inflation without throwing the economy into a full recession. That's really not easy. And remember, they have this dual mandate. They have maximum sustainable unemployment, but then they also have price stability. When you look at inflation readings, those are lagging indicators. And so Powell has said that they're not going to shift their policy until they see, sustained inflation come down. And he's going by those inflation readings. But I think that there's some things that we can look at beforehand that are more current indicators. So, we're seeing some more real-time indicators. We're seeing commodity prices come down, oil prices come down, shipping costs come down. And the question is the Fed going to kind of pause rate hikes, kind of shift their thinking and pause rate hikes if they see some of these indicators continue to come down?